What are you seeing in terms of private equity financing, which was very volatile last year, started off well, dipped in July and thereafter, and then recovered a little in the late fall?
We're in active discussion with major financial sponsors and private equity firms, both in the U.S. and internationally. And so the current environment, has them interested in putting money to work. I think they have large funds with a lot of investable capital. So I think we'll expect to see activity. We're working on a number of transactions right now that feel more like the kind of activity levels if those were to proceed like we saw in the first half of 2011. And so I think markets got so strong by the third quarter of 2011 that they got ahead of themselves. And I think we went through an indigestion period that was reasonably well distributed. And now we're back to an environment where I think sponsors are looking for deals that make sense, appropriate amount of leverage, easily distributable and well structured by the banks on one side, attractive equity returns for their LPs on the other side. They're not going to be enormous transactions. I think they'll be very specialized transactions. So, I think they'll be more likely to be the $2 billion deal or the $5 billion deal than the $10 billion or larger. And so I think in that kind of size category, I think there's a great balance that can be had between banks, the capital markets, and the sponsors each getting what they need in order to have, deals that make sense for everybody.